We always joke, strong opinions weakly held, right? Like, I think this is the greatest company in the world. I'm going to recommend it at investment committee. I'm going to write a memorandum about it until somebody tells me otherwise. And then I'm going to listen to that. And even if I've spent 2 weeks of my life diving into this company, if I really agree with that statement, I need to be able to drop on a dime and cut bait. I think one of the things we've gotten better at over the years is cutting bait quickly and, doing it respectfully with the entrepreneurs. That's a really important thing too. And, putting the entrepreneur, first, and we're not perfect by any stretch of the imagination. And what we've learned, if you focused on the success of the entrepreneurs and empowering them, typically everything else can fall into place over time.
Hello, everyone. My name is Chris Powers, and I want to thank you for joining me on the Fort Podcast today. This show is an open-ended discussion and journey covering real estate, business, entrepreneurship, and investing. I would love to hear from you by tweeting me at Fort Worth Chris on Twitter. Hey guys, it's Chris. Thank you so much for joining me for another episode on the Fort. I'm really excited to have Aaron Block and Zak Aarons with me today, who are the co-founders of MetaProp VC. MetaProp is the most active early-stage real estate and PropTech investor globally, with 125 plus PropTech investments. And their capital partners are a cross-section of blue-chip real estate firms who represent the largest consortium of early adopters and technology enthusiasts in the industry. We have an awesome conversation. We talk about the story of Zak and Aaron meeting each other and the idea to create MetaProp. We talk about kind of the emergence of PropTech as an investable asset class. It wasn't too long ago that PropTech really wasn't a thing. We talk about the processes that MetaProp goes through for identifying and investing in companies, what early stage founders do really well when building and raising capital for their business, the value that MetaProp looks to bring to their portfolio companies and how they do it. We talk about PropTech companies they are seeing that are emerging and what asset classes are receiving the most attention and capital investment, how PropTech will influence a post-COVID world, and a lot more. Thank you so much for continuing to join me on this journey. Zak, Aaron, welcome to the show. Thanks for joining me today.
Thanks for having us.
Can y'all give me a little bit of background on y'all's story kind of growing up and then what led y'all to become partners at MetaProp?
Yeah. Zak, you want to start with your story? It's far more interesting.
It's certainly more interesting.
I love it.
Of course, I will start with it. Thank you, Aaron. My personal background, I grew up in New York City, and my dad was in the real estate business for as long as I can remember. He was originally on the public side. He ran an organization when I was born. He was still running it called the PDC, which then became the New York City Economic Development Corporation, which is the sort of private entity that controls all public-private real estate partnerships. And then he went to do real estate at General Atlantic when they were still doing it in the private sector around the time when I was first sort of becoming cognizant of what business was and, what my parents did for a living and all of that stuff. So I got exposed to real estate from a very, very young age. They were doing primarily affordable housing developments around New York City. And I got to do things like go, visit a job site and put on a hard hat and boots at very young age. I remember being 7 years old. They probably wouldn't let you do this now, but being 7 years old, get to go up in a hoist and just feeling really special, feeling a sort of connection to real estate and that world. I went to Brown undergrad and then went into banking for a little bit. Didn't think I wanted to do real estate professionally, although I always liked it. Then after that, I was also interested in travel and tourism. So I got an opportunity to run and partner with an old friend of mine, a travel and tourism technology startup. And that was called Travel Goat. And that was my first sort of experience to entrepreneurship and the New York sort of technology ecosystem, which back then, this was around 2007, 2008. You had companies like Etsy, launching. You had companies like Foursquare launching in 2009. So there was definitely a vibe starting to go on in New York, and I knew I wanted to be part of that. I ran that business for a while. I had a great time doing it. I became a walking tour guide and led hundreds of tours around New York City. I actually, funnily enough, we had, Aaron will tell you more about it, but we had our company outing yesterday. And I actually, as one of our safe, socially distanced activities, I led a walking tour of the West Village, which was one of my favorite neighborhoods to do for the whole MetaProp team. I did that for a while. I couldn't scale a business, though. I really could never build the type of technology that I wanted to build. So I made a difficult decision to kind of step away from it. And then I started just leveraging my skills differently. So I started becoming a consultant for different companies, and then also angel investing on the side in similar types of businesses. Entrepreneurs who are building technology mainly on mobile for travel and tourism that I could sort of only dream of doing myself. And so I figured, well, instead of spending all this money trying to develop technology myself, why don't I just invest in entrepreneurs who I think are more skilled at that? So I started, dabbling in angel investing in the New York tech scene, and then simultaneously started doing consulting work. My dad actually in 2011, he wrote me into one of his real estate projects to do some consulting work. I used to, when I was still running Travel Goat, the walking tour, the travel technology business, I did a lot of sort of growth hacking online. I did TripAdvisor, I did Facebook, and I did marketing on social platforms before that was ubiquitous. And so my dad had this thesis that sort of social media and content marketing was going to become increasingly important in real estate. And so he brought me in to do that initially for one specific project in Los Angeles. So I kind of got into real estate that way in a quasi-circuitous way, even though, as I mentioned, I'd been exposed to it my whole life. And then I fell in love with it. I started, doing things in real estate that related to other categories than marketing. So they had me starting to do property management work. I started to do some leasing work. I started to do some entitlement and development work. I started working with architects and lawyers and consultants and all the people, and tenants and all the sort of people that real estate professionals get the privilege to interact with. I started seeing all these issues, and then I realized that it was the right time to start investing in it and leverage the connections I'd made in the New York startup world and start investing in what we now call PropTech instead of having a sort of less focused approach, doing some travel and tourism tech investments and things like that. And I had a business school professor who's now on our advisory board. He's a longtime venture capitalist in New York named Stu Ellman. His firm's called RRE Ventures. I came to him with an idea for a topic that I wanted to cover. And he said, you have a unique perspective. You have a real opportunity. You work at a real estate company and you know the real estate business because you grew up in it, but you also know the sort of ins and outs of the New York startup ecosystem. Like this, the real estate technology is going to be a big thing over this coming decade. And he was looking at investing in it for his fund. He's like, well, you should look at it too. So I sort of took that advice and then I became, I very, very actively pursued sort of planting a flag and being the PropTech angel investor and building a diversified portfolio that was largely based on some of the issues I was having at work, just trying to do my job, just trying to be a good landlord and be a good property manager and be a good facilities manager and interact with contractors and close deals on the purchase side or selling real estate. All the sort of problems I had, I've always been trying to find technology to fix them. And so that was sort of fast forward to when I met Aaron, and I'll pass the baton to him. When I met him in 2014, I had built up this sort of portfolio of PropTech related angel investments and a reputation as someone to go to who understood sort of startup type economics, convertible notes and valuation caps and all of those things, but also knew what real estate was, knew what a cap rate was, knew what NOI was, knew what a subcontractor was. And back then there just weren't a lot of people who had both of those things going. And so when I met Aaron, who had also been in a similarly circuitous kind of real estate and tech career, we kind of bonded and we realized there would be an opportunity to sort of take the stuff that we've been doing as individuals, for years at that point and team up to institutionalize it and grow it.
I love it. Aaron, before we move over to you, Zak, you said one thing that you have a lot of humility. You said, I couldn't build a tech company or I couldn't scale it. Was that more a reflection of within, or you just weren't in the right industry, or you just realized you weren't the person to build big companies?
Yeah, I realized I don't have, and this is something we look for, often in our CEOs. I didn't have a product process and I didn't have a mentality. And so I had read Lean Startup and all, and that's what, and I teach at Columbia, and I sort of teach a variation of the Lean Startup. And the book that Aaron and I wrote, PropTech 101, is essentially a PropTech specific. So I know the methodology. I just was challenging for me to practice it where I couldn't. I had this idea of the product I wanted to build, but I was only building it for myself as the customer. And then what I sort of refused to allow myself to realize was that at the end of the day, everybody I spoke to said they wanted this product. It was an app that you would download and do these audio walking tours of New York, was what the Travel Globe product was. But then we were funding that through a pretty good in-person, standard kind of walking tour business. So, I realized that no one really wanted the product that I had in my head that everybody wanted, and certainly no one was willing to pay for it at the time. And so I realized that it was not necessarily that I would never be able to build a technology company or in that way, but that this as a technology company, was it with me at the helm, was really not going to be long-term successful. And then the other component of it was the in-person walking tour business. While it was financially successful, to have to scale that, and I knew this industry very well, I would have had to sacrifice the quality, because there just aren't that many really talented licensed tour guides in New York who are able to do tours in the way that I want them done, which is sort of a mix of pop culture, history, food, and most guys are either really good on sort of pop culture and taking you to cool places, and some guys are like amazing on history, but they can't, if they're like, well, I want to just go shopping today, they wouldn't be able to help you.
Yep.
So I knew I couldn't scale that business either, the in-person side of my business. And so I was good at the consulting work, and I was good at being an angel investor. And I could feel, more confident in my ability at both of those things. And then I would say when I joined Millennium, I was able to execute, but I never managed sort of large teams myself. I managed large teams of consultants, often 15 people deep, but they weren't directly reporting to me. And I never built any products per se, but I was very aggressive in testing and piloting technology. And that was part of the appeal of, having me as an angel investor, was I would definitely be one of your first beta customers too. And I was actively doing a bunch of workflows that would be relevant to your product.
Got it.
So,
Aaron, what's your story?
Oh man, mine's pretty simple, but I appreciate you asking. I'm humbled. I should have gone first because it's a tough act to follow. I'm just a Midwestern guy in New York City, from Chicago, born and raised, University of Illinois undergrad, and then straight into the real estate business with Cushman & Wakefield for many years. Kind of a combination of my growing up very entrepreneurial kind of world, of always having run some business, and family members who have run businesses, and I've done a lot of sales during school and stuff. So it was great to get into a big international real estate organization. I quickly was shipped off to New York, where I built the beginnings of my foundation of the real estate career with a top group out of Manhattan. And then they shipped me off to Russia after that, where I was helping build up the Russia, Kazakhstan, and Ukraine region. And I became a partner at Cushman & Wakefield there in the European operation. And the swan song for that 10-year run in real estate came as I was running the Chicago and Midwest business, repatriating back after I had my first kid, and spent a couple of years almost there leading the Midwest. That was a great real estate run for me. I had made several angel investments as the years went on in Europe and the States. One of them was a tech startup was very friendly with some of the board members and got to know the team and joined the board and became a co-investor and started talking about putting more capital in and leading around. And the founders were looking for some extra help to build a business. And I realized over the years, that's really what I love doing. We made a deal for me to kind of run the business. And I jumped in as CEO and we built that up. That was a lot of fun. That was cross-border e-commerce, had nothing to do with real estate whatsoever. So that was kind of version 2 of Aaron's adult career. And then we sold that business off in 2014. And I moved back east to be near my kids' grandparents and the New Jersey, tri-state area here in New York. And I had, kind of 2 careers and was ready to reinvent myself. Real estate and tech. Well, why don't we figure out what's at the intersection of those 2 things? And when you start asking that question in New York City in 2014, I can tell you that you get a bunch of arrows pointing directly at Zak Aarons. So the more I started to explore the space and get educated, the more I realized that there was one person who had all the answers and knew all the people and had done all the investments. And it was a lot of fun to pick his brain. And we started workshopping together the concept of an organization that would build into the space some connective tissue and leverage the opportunities that we were both seeing and taking advantage of. Certainly Zak was, and I was starting to smell the opportunity in a big way. So we decided to partner up on MetaProp, and that was kind of end of 2014, and we launched in 2015, and the rest is history. So that's the background. But I think what's common and interesting is we've got this overlap of real estate, the tech, and investments. So that's kind of core DNA for these 2 fellows.
I love it. So 2014, PropTech was, I mean, it's fair to say, was in its very, very much infancy. Y'all came together. What was kind of the straw that broke the camel's back that y'all are like, we're going to raise a institutional style fund and get going? Was there a certain deal that came up, or y'all just over lots of conversations said, let's do this?
The real answer is that Zak brought it up and said he always wanted to do a venture fund. We were in the process of working out how to invest in our first round of investments together, which were graduates or soon to be graduates at that point of our first MetaProp Accelerator at Columbia University program. So that was the real catalyst. Straw that broke the camel's back is we had to write checks, and we had to figure out, do we want to just go pro rata into these? Do we want to syndicate to others? Do we want to pull them together in an LLC? And Zak said, well, why don't we do a fund? We've always wanted to do a fund, and then that was really the seed of the idea. Right time, right place, good team, and a lot of people helping us along the way. We created from scratch the investment management business that is now our primary modus operandi.
How large was that first fund? And as you look at it today, and we can talk about the second and third funds in a bit, but how large was the first fund? And maybe what are some things looking back that you learned during that period that maybe you didn't expect before y'all decided to raise a fund?
First fund was a couple $1 million, and it was really just the aggregation and institutionalization of our angel activities, and a chance for us to work through the partnership dynamic that hadn't really had investment up until that point, and kind of later in 2015 we hadn't built the muscle yet. So this was a perfect kind of playground for us with our own money and with other folks' money, but with building the infrastructure necessary to be really good at this long term. And we made some really great investments thanks to Zak. We had a lot of fun, and we really made a ton of mistakes, none of which sank the ship. Of course, there were more opportunity cost mistakes, not organizing things well, not really understanding yet how to have the formal processes in place to perfect our craft, because we were still learning our craft. One example is we didn't reserve any capital for follow-on in that first fund. The money just flew out the door into these great entrepreneurs' hands, and that's really proven nice. So, we learned a whole heck of a lot. And I think probably that, if I may speak for both of us, the most important thing we learned is that we needed a lot of help. And that as good as we were at the things that we were doing, I'll argue best in the world, in our particular niches and areas of expertise, the idea of managing capital professionally in a early stage venture capacity, seed fund, is tricky stuff, and we need some firepower here to be able to do what it started to look like we kind of come upon here in more and more opportunity, and that's when we brought in Zak Schwarzman, and we were fortunate enough that he couldn't escape Zak's grasp, and then that was really the beginning of MetaProp, the investment manager and proper fund, right? I mean, fund was great, but when Zak came on board, he kind of hit the brakes and said, "Whoa, guys, let's evaluate everything we're doing here, and let's set ourselves up for success in the long run and do it right." And that was great. So that was off to the races from that point.
Did Zak have a VC background or an institutional money management background or something?
Oh yeah. Zak. I mean, Zak, you can tell them a story about how you guys connected in business school and all that, but Zak was a proper seed fund venture capitalist in New York City, right? So that was a big deal for us to be able to bring in some of that caliber of talent.
Yeah, I had gone to school with him, and we were in that same class together, where I got that advice to become a PropTech investor. And so I was known to all of my CBS classmates as the person that they would call if they were evaluating one of these deals. So that's how we stayed in touch after business school. And he was a principal at a fund called Gotham Ventures. It looked like they weren't going to raise another fund. So, he had the opportunity to join us, and he'd always had a passing interest in real estate, like many people do. His mom's actually a real estate agent for many years up in Greenwich, Connecticut, having actually her best year ever. Because of certain dynamics that I'm sure you've spoken about on this podcast before. But what we found compelling about Zak was he had actually experience in verticalized sector-specific venture capital at the seed stage. So before he was at Gotham, he did a stint at this fund called Learn Capital, which was an ed tech fund. He had an idea that this sector specificity was going to be a winning strategy. He joined us in 2016, so we've now all been investing together for at least 4 years on our investment committee. But yeah, so we liked that aspect of it as well of the background. Yeah, it was very natural to start working together because we've been sharing these PropTech deals for so long. Like Gotham Ventures was a generalist fund, and they wanted exposure like we've seen pretty much every Sand Hill Road and Boston and New York venture fund do that's a generalist. They want, somewhere between 5 to 25% of exposure into PropTech and construction tech. So, we benefited greatly from maintaining good relationships with the broader VC community at large. But yeah, that was, the graduation, I would say, from fund 1 to fund 2. We started doing things like leading rounds, right, which we'd never done before, which comes with its own sort of processes and protocols. We started serving on boards, which we hadn't done before, which comes with a sort of new set of processes and protocols. We started to have a much more organized approach to portfolio construction theory. And Zak he's a fellow in this, the Kaufman Fellowship, it's called. It's like the Rhodes Scholarship for Venture. And so we are able to tap into not just a network of hundreds and hundreds of the top VCs globally, but they also do these information sharing sessions. So we have a up-to-date research on what the most successful strategies are for how to set up a portfolio for success. And those were things that we were certainly thinking about when it was just us investing out of Fund 1, but we hadn't codified, we hadn't institutionalized it. Now we're at a place where we're still learning and growing and improving every day, but we are an institutional grade venture capital investment manager.
How large was your second fund, just for the record?
40 million.
Just to paint a kind of a broad brush across the industry, how much is being invested in PropTech kind of globally? Do you guys have like a number for how much money's going into this space now that we're in 2020?
Yeah, in 2013, we like to say when the space wasn't even the space and PropTech wasn't a term, certainly not in North America, at least. You're looking $700-800 million of venture money coming in now. Now, fast forward to where we are, maybe 12 billion or so. So it's
Wow.
really been a rocket ship.
Yep. How many deals do y'all see a year versus how many you ultimately invest in?
Part of what we do, which is not the easiest part, for sure, is say no. And you got to be really, really disciplined in this world. In order to be successful, we pass on 99.5% of the opportunities that come to us. And the good, the good and bad of it is we see a lot of opportunities. We have a real sourcing and distribution machine that allows us to see, a couple hundred plus new PropTech startups every month. And so building a machine to be able to process that, in addition to source that, is a very important function of our strength as an investment manager and venture capitalist.
Are there certain things about a business or about, you're seeing a couple hundred a month? Is there a couple things that stand out that get you to a quick no, that you don't have to spend more than maybe an hour or a day kind of looking at it before you're like, this is a no?
Zach, you want to talk about your magic and the quick filter?
I'm a human quick no. That is my job, one of my jobs within the organization. So everything that gets sourced that looks remotely compelling gets sent to me. I've just seen, I put in, whatever Malcolm Gladwell, that 10,000 hours. I've put in way more than that into PropTech, into looking at decks and email blurbs. And look, I don't get it right all the time. There's stuff that I've done a quick no to that actually deserved a deep look, or maybe even diligence, or maybe even warranted our investment, right? So it's not perfect, but my pattern recognition, at this point, I've seen more of these decks probably than any human being in the world. So I'm able to very quickly DQ stuff. And then I think another sort of strength of our team is if we think it looks interesting, we're able to very quickly route it to someone who can really tell us if it's interesting or not. And that's the benefit of, having a, decade of building a sort of global network of PropTech enthusiasts. But I think quick filtration is very important. When you run a practice like ours, where you're looking at 200 things a month and, tracking 8,000 companies at any given time globally, you need to be very draconian with the quick pass, and you need to be, if you take enough time with the entrepreneur, you need to be respectful of their time and do the pass gracefully. But if you've never spoken to the entrepreneur before and you really are not interested, you need to be very quick to just let them know that this is not of interest to you. And, thank you for sharing it with me. So that's the sort of short answer to the filtration. And then it goes through multiple layers. If a company doesn't have a product, right, that's not an immediate no, but that, means they should probably have a lower valuation, or they should have at least some thought about what they're building and some sort of level of mock-ups or stuff. So there's always, like, if you look at it like a ladder or, like a Christmas tree, at the top, it's like, okay, we're closing and wiring money. There are all these points where you can get kind of knocked off a rung, right? And that's how we approach our diligence process. We approach it with enthusiasm about pretty much every deal we see, and healthy skepticism, but also the ability to completely change our mind quickly. We always joke, strong opinions weakly held, right? Like, I think this is the greatest company in the world. I'm going to recommend it at investment committee. I'm going to write a memorandum about it until somebody tells me otherwise. And then I'm going to listen to that. And even if I've spent 2 weeks of my life diving into this company, if I really agree with that statement, I need to be able to drop on a dime and cut bait. I think one of the things we've gotten better at over the years is cutting bait quickly and, doing it respectfully with the entrepreneurs. That's a really important thing too. And, putting the entrepreneur, first, and we're not perfect by any stretch of the imagination. And what we've learned, if you focused on the success of the entrepreneurs, and empowering them, typically everything else can fall into place over time.
For sure. If a founder's listening to this and you were going to give an answer to this question, just think of the founder in mind as like, what do good founders do, or what are best practices that you see that help the companies that you ultimately invest in? What are they doing right that you see maybe other founders that might have a great product, but they just are just bad at trying to raise money, I guess? Like, what do good people, good founders that ultimately raise money, what are they doing well while they're raising money?
Yeah, well, that's a great question. I mean, to your point, some founders are just great at raising money. Those founders are always going to raise money, whether they have a great product, a mediocre product, or no product for that matter. When we're actually doing a deal right now with an excellent product-minded founder who is not particularly great at fundraising. The first question you ask is, can this person be okay with not being that great at fundraising? And then A, try to get better, and B, recruit accordingly a co-founder who is good at fundraising. And do they have we spoke about humility earlier. Do they have the humility to be coachable to do that? Or are they arrogant and they just blame their lack of success on fundraising on everybody but themselves? Right? So that's the first thing I would want to know when I'm placed in front of a product-focused entrepreneur where I like the product, but I see that the entrepreneur is struggling to fundraise. Similarly, we see all the time entrepreneurs that are maybe good at product, great at fundraising, and bad at sales. The same litmus test. Do you have the humility to admit you're bad at sales? Do you have the desire to improve at sales? Because as Aaron Block says all the time, it is not rocket science, right? It can be taught. We can't necessarily teach you to be like amazing at it, like top decile at it. But if you're the CEO, you can always bring on that CRO, that head of sales, that is that person, right? So you don't need to be that, but you need to learn about it. You need to show a willingness to learn about it enough where you can go recruit that person. And then you need to show us that you're charismatic enough and your idea is good enough. And maybe if you're a product-based person, your product's good enough where you can bring a talented CRO, you can poach them from a company, right? We do this all the time with our companies. And I'm not going to name who we poach them from, but we take big companies that are sort of scaled incumbents and we take their VP level talent. Maybe they're fully vested on their equity. Maybe they're board. Companies may be public or, going to IPO soon. And we say, how do you want to be, the CRO of a founding team? Or how do you want to be the chief product officer of a founding team? We have all the components ready. We're just missing you. So the other litmus test is like, can you, along with our help, right? Can you recruit a person of that caliber? So we don't view it, and this is something I try to drive home with our team almost weekly. Number one, if a deal doesn't have hair on it, right, then we're probably not going to see it. Okay, those are the deals. The deals in the upper echelon, on Mount Olympus, those are taken on Mount Olympus, right? MetaProp gets what filters down to the mere mortals, right? So everything's going to have something wrong with it, right? Maybe we think the TAM is too small, total addressable market. Maybe we think the person doesn't know how to sell their product. Maybe we think the person isn't great at building a product. Maybe we think the person isn't great at fundraising. So the question always becomes, number one, can MetaProp do something here to round out this team? Can we help them recruit and help train them, get them the consultants to train them, do the training ourselves, and also recruit the core members of the team? If the answer is no, then we walk. If the answer is yes, we think we can do that, and the founders pass the litmus tests where they show they're coachable and ready to go, then we're going to want to do the deal. So we're not looking for perfection.
Yep. Do you require founders to have a co-founder? Like there has to be two at the head? I know a lot of VCs won't do deals unless there's two co-founders.
No, we just did a deal. And last year we did a deal with a solo founder. And the first thing we did was work with one of our favorite recruiting firms to recruit a really, really top tier co-founder who was a serial entrepreneur in the space. and they hit it off, and that's, I think, going to be a potential fund returner for us.
But it is the exception to the rule, though.
Right.
For us.
Absolutely. We like to back. We would much prefer to back a team.
So they might not have a co-founder right out the gate, but y'all do kind of require it along the process. So you're not going to let a solo founder run for years and years by themselves.
I won't let a solo founder run for a minute.
Yeah, got it.
Right. And this particular instance was a relationship we had, both Zak and I had for many years. So there was a very, very high level of trust with that entrepreneur. But that was the first thing we did. Right. And in most cases, per Aaron's point, we're going to ask that they do that in concert with the financing. Not that we make that contingent in our term sheets. We don't do business like that. But we say, look, we like your idea. We like what you're doing. We're interested in funding it, but you need to have this person on your team, and then come back to us when you do, and then we'll write you a term sheet. And then that also, when you challenge someone like that, right, it shows who's a peak performer and who's willing to walk through walls to get their thing done, and who's just going to shrivel up when you say you need, because no one can build things alone for forever. Right? I mean, recruiting is the most important thing a CEO can do.
Do y'all care whether they have a real estate background or not? I mean, just from my limited experience and being in the real estate industry, I often see these products and the people that are creating them never had a real estate background to begin with. It's sometimes shocking to me, the questions that people will ask me that are building like a property management software or something. Do y'all care if they're coming from a real estate background or not?
Yeah, we much prefer it. We ideally prefer someone to have, and we're now in the benefits of a maturing ecosystem. We prefer to have a PropTech background. And that's now, so like if you so we're funding a business, for example, right now, the entrepreneur came out of Procore, right? So we have specific PropTech experience. So you're well-rounded in yourself. I think if you don't have that, sort of second best thing is, do you have this weird hybrid like Aaron and I do of prop and tech, right? Where you did some real estate related thing in your career, but you've also done something in like tech or startups or entrepreneurship. Then I think below that, we will still fund you. I can think of multiple instances, but you have to be insanely where you really are just an entrepreneur tech person and you don't have real estate experience per se. You need to show us that you have, again, a very inquisitive mind to learn and not like fully formed ideas in your own head of how things should be necessarily. You should have a point of view. And it's our job to recruit that head of real estate for you all almost as quickly as possible. So that's something that, MetaProp can offer. As an entrepreneur, I would say below that type of person is the person who's only been in real estate and never been in startup entrepreneurship and tech. That person is typically very hard to train. I'd rather train a tech entrepreneur to do real estate than train a real estate person to be a tech entrepreneur. But we have funded those businesses too. But then obviously everything's opportunistic and every entrepreneur is different, but if I had to qualify it, that's how I would qualify. We're very, very lucky now that we've been in this space for so long, where we have an increasing a number of entrepreneurs where they're serial entrepreneurs and they're coming back to us again, and they're either doing, they're doing PropTech, or they've even been in PropTech before. They've been a senior VP of sales, product, whatever, at a Procore, at a VTS, at a RealPage, stuff like that, which didn't, when I started in the space in 2010 and there were only like 2 or 3 public, like that concept didn't even exist. So when someone comes up to me and they say, what's the best way to start a PropTech company? I say, go work at a PropTech company. Like, a lot of them are hiring. There's a lot in our portfolio, thankfully, that are hiring. Like, go do that for a couple of years. And then, if you want to get into PropTech VC or you want to get into PropTech entrepreneurship, like, that's the best way to do that. But I couldn't tell people that even 5 years ago, because there frankly just weren't enough opportunities, just weren't enough jobs yet.
So I want you guys to take your humble hat off. If you funded the founders have made it through, they've raised money, and you got to take your humble hat off. And I asked one of them, what is the value that MetaProp has given to you post funding? What would some of them say?
I think some of them would say that we have transformed how they think about sales, marketing, and distribution as an organization. And then I think some others would say that we have made key introductions to them to customers that were sort of make or break for the trajectory of the business. And those are sort of two things that we can offer to an entrepreneur as a PropTech focused fund that I think other, maybe generalist competitors cannot. But when we've moved the needle, it's been in those particular categories. It's been focused on sales and distribution, and the Rolodex activity associated with that is a big part of it. The coaching part of that, right? Because I can introduce you to 100, landlords, but if I don't train you how to sell to them, you can't close a deal. And then the third leg of that stool is recruiting. So I'm not going to be your CRO, right? I have a full-time job. I'm a general partner of MetaProp, right? So I can't be your CRO, but let's recruit you a CRO, and let's recruit you SDRs and AEs under that CRO, and let's build a sales organization. And if your distribution is different, then let's build a marketing and advertising engine where we can have predictable revenue. And then let us leverage our Rolodex to get you those key introductions. And so it's when those three things are all working, then it is frankly a beautiful thing. And there is nothing better than getting to put these wins on the board with entrepreneurs, especially when serving in a board capacity, where you can see it, quarterly.
How often do they reach out to you? Or are you reaching out to them? Like, what does that relationship look like? Is it weekly, monthly, quarterly, whenever?
It depends. I think, if it's a board relationship, it's sort of different, but it depends. The way we run it, we each of us, we have, and Aaron can speak more to some of the stuff we do for our startups, but we have a dedicated startup services function. A lot of VC funds would call this platform. And then each of the partners has a specific book of entrepreneurs in the portfolio that are like their purview. And those check-ins happen, anywhere between, I would say, bi-weekly to quarterly. But there are particular instances where those walls break down, and I'm helping a company specifically that's in Aaron's book, or Aaron's helping a company specifically that's in my book. Like if a company that is in Aaron's portfolio needs help with like a zoning type, they need access to a zoning attorney, right? Like I might get involved there, but if someone in my purview has like an HR issue, I will most likely involve Aaron, because I've never run large organizations and Aaron has. So we're pretty flexible and fluid with the cadence of communication. Aaron, you want to talk about sort of the how we mechanize the startup services function?
Yeah, I think it's just important to focus on being great at a few good things, right? I mean, you got to be really narrow. We preach it and we try and practice it. Is pick a few things to be, ninja-like superstars, to add the most value. They're going to have the biggest impact, and then put a process in place and optimize for that, right? Scale it up. So for us, getting strong leadership for this function really works hand in hand with our investment team to make sure that prior to a deal, during the negotiation with an entrepreneur and post close, onboarding, and relationship scale up, there's someone who's accountable for helping carry their share of the load, particularly with a big portfolio like ours. Our vintages are dozens and dozens of startups in each fund. So you can't be a great investor and a great startup supporter. Acquisitions and asset management on the real estate side, right, are typically two teams, but they share a lot of competencies. So that's how we've specialized over the years. So we spend a lot of time helping, of course, with strategy, and there's economies of scale of communications, right? I mean, we've got a great PR machine and a huge newsletter distribution, social channels, and all that's great for getting word out. But what they remember, the startups is did they get new customers? Did they close more capital? And did they get the people they need in order to be successful? And so, we track and report on all of those metrics weekly and monthly. And, nobody else does this. So there's no one else to kind of gauge yourself against, right? This is pretty specialized work. So, all we try and do is race faster and beat our own records here and add more value and be great partners and, leverage our own partners' time, my time, Zak's time, so that we're doing the highest value conversations and the highest value activities at any given time, while at the same time just flooding our startups with the resources if they need them and staying the heck out of their way if they don't.
Yep. You all have on your website that like your LPs represent over 15 billion square feet of real estate. There's no mandate that obviously any of those LPs use any of the portfolio investments that y'all make, but do you just kind of use that as like, we have this whole world that you can talk to if we invest in you? Like, how do you think about that?
Is you're getting the best of the entire real estate industry.
Yeah,
you get Zak Aaron's on your cap table. It's always been the case. That's a vanity metric.
Mm-hmm.
That's owned and managed real estate. Obviously that's not an active sandbox for piloting and testing, but it is order of magnitude and directionally important to illustrate that you really are, you're getting access and distribution that doesn't exist literally anywhere else at this stage in your development. So, those folks don't have to pilot or test. We've got every aspect of the real estate value chain covered in our LP base. From brokerage to construction to asset management to development. We've got all those folks, and they're leaning in. Right, the fact that they put in their capital to fund alongside our own, is indicative of an interest at a minimum. And we try and give our entrepreneurs the best access we can, and we try and give our LPs the best access we can, and connect the dots wherever feasible. But it's certainly not a requirement. No.
Yep. Maybe two more questions on kind of MetaProp as a business, and then I just want to talk a little bit kind of about the actual PropTech world and what you're seeing. But kind of two things. The first, what changes when you lead a round versus just participating in a round?
When we lead a round, we'll typically take a board seat. So that changes. We'll negotiate the terms directly with the entrepreneur of the financing, meaning the valuation and preferences, things like that. The sort of venture capital standard terms will be negotiated between us and the entrepreneur. It's also sort of tacitly understood in the industry that if you lead around, like you're gonna not ditch that entrepreneur for the next round, right? Like you're gonna sort of have capital available if the company needs to bridge, where if things don't go so rosy, you're kind of there, come 12 months, 18 months later. So those are the sort of three things that are different, I would say. We try to have follow-on capital available, where we can to all our entrepreneurs, whether we're leading or not. But there is the understanding that, you have this sort of additional responsibility. You don't want to ever throw good money after bad. But those are the slightly different dynamics. Other than that, we don't approach it differently at all. You get access to the same team at MetaProp, the same network, frankly, in some cases, the same amount of time from the partners. I have some entrepreneurs where I'm not on the board of, but we talk all the time. I have some entrepreneurs where I am on the board, and it's maybe, once every other week we check in, and then obviously we get into it around the board meeting. So it's the flavor to Aaron's point. It's not, and there's been a lot of I don't know if you've seen Twitter recently, but there's been a lot going on with board members and VCs kind of thinking that they run the company. And that is not what we want to be. If everything is firing on all cylinders, we are not going to look for problems that don't exist. But if there is something that's sales and distribution and marketing related that I see going on with you that I think I can fix, like, you better believe I'm going to come in there and try and fix it.
Yeah.
And it's not that's not always the prettiest process. Like, you're going to have to make some tough decisions, and it's some real grown-up stuff. So we're not scared of that either. And we're also not scared to ask for help. If we see something, for example, where the the product's just not humming, or the technology stack is not where it needs to be from a scalability perspective, we co-invest in all our deals with funds that are more sort of plugged into the Sand Hill Road and Silicon Valley ecosystem, where they can come and recruit, top-notch Python engineers for companies, or, incredible, visual UI UX people. We have done stuff like that in the past, but few and far between, as our focus, as I mentioned, is sales and distribution.
Okay, the last question on kind of the business, and this maybe strays a little bit away from the VC side, but y'all also offer consulting and advisory services for real estate businesses. Kind of what does a typical project look like, or what are you doing on that side of the business?
Well, we offer those services as a value add to our strategically minded real estate partners who invest with us.
Got it.
Funds. So it's exclusively leveraging all of the experience. We had a 4-fee consulting practice in the very early days of MetaProp. Around the same time, we brought Zak Schwarzman on, and we realized that investment management is our business, not consulting, but that we are sure a heck of a lot better at our business having this competency deployed for our LPs. It makes them move faster, pilot, test, invest more, faster, better than they would have without us. And it certainly makes us better investors, being plugged in deeply with industry. We know a lot, but it takes a village to be great at seed, particularly in a space this big and this broad. And, we leverage those relationships all day long. And frequently that's from the consulting work we do with them.
Is there a certain asset type that is getting more investment, maybe like multifamily or office, that is getting more investment than others? Like, where's the majority of money going to, or is it kind of distributed out evenly as y'all see it?
No, I think people are now in PropTech gravitating to make investments in the real estate asset classes that are less impaired, or ideally the ones that are thriving. So there's been a big focus on single family, been on a tear, from a brick and mortar perspective this year. There's been a big focus on logistics, warehousing related real estate. There's been a big focus I've seen, starting to be a focus on senior housing, assisted living. There has been, I would say, just because of the sort of COVID-19 disruption to that industry, that was sort of so palpable. I would say there has not been a lot of action in office tech, in retail tech, hotel tech this year, because the purchasers, would-be purchasers of that software, are either unsure of what their future holds, or sort of waiting for a change in the environment, whether that's through a vaccine or some other break, to revive those conversations that they would be having with software vendors. So we have sort of moved, our practice, we're still very focused on the same trends that we started seeing a decade ago, trend toward digitization, trend toward enterprise software workflows, trend toward computer vision, artificial intelligence, natural language processing. But we are certainly leaning into single family a lot this year. We're continuing to lean into construction, because while there will be fewer construction starts, a lot of essential infrastructure, data centers, other types of infrastructure, healthcare, are going to be starting construction, and all the construction that was started pre-COVID needs to finish. So we're still very focused. We have been for years, but we're still very, very focused on the construction side of what we do. I'd still like to do, frankly, I'd like to do a contrarian retail deal. I'd like to do an office deal before we close out the year. If you look at our current pipeline, the bulk of the stuff is single family, multifamily, construction related, I would say.
And the single family, multifamily stuff, is that like smart home type technology, or what kind of technology around single family and multifamily?
It varies. So we invested in a technology enabled fencing and paving contracting firm. We invested in a residential brokerage platform that enables for sale by owner. We're investing in a sort of Redfin competitor in Korea, actually. We also made an investment in a accounting technology for multifamily companies. So it is diversified as it relates to those asset types, the type of things that we've done this year, and not necessarily smart home driven. I think smart home, we've done some of it in the past. I think it's challenging. You have these really, really big players, and a lot of try and copy you if you have any modicum of success, and you're kind of captive to selling to them as your exit. Although we have had some, success with it over the years. We backed a company called Flow, which was a smart home plumbing tech, which is successful. Latch is doing very well on the smart home front, although they really have an enterprise. It's not a direct to consumer smart home play. So we've done a fair bit of it, but never more than 5% of the overall fund allocation.
Got it.
Into smart home. Yeah.
Is PropTech aiding at all in kind of the getting back to the office and or work from home? Like, are you seeing anything kind of there that's developing?
Yeah, very much so. We're looking at a lot of companies that do sort of cleaning audits related to getting back to work. We've looked at companies that do, thermal temperature scanning for back to work. We've looked at companies doing queuing, for retail and elevatoring. So we've looked at quite a bit of that type of tech. And then we've looked at technology that leverages data to figure out, like, what does the new distributed world look like, right? Because the idea that everyone's only working from home is silly. Like, people will still need offices, and there's going to be this sort of potentially hub and spoke model. So what does that look like for real estate data? So we're very excited about that as well as it relates to back to work, and the sort of new paradigm of work from anywhere.
Yep. All right. 2 more questions here. We'll dive into a couple of fun personal ones and then we'll bring it home. But like, when you think of the thermal imaging, and you're hearing that right now, and you're thinking, y'all are making investments that could take, 5, 7, 10 years to harvest. Does that strike you as something that might be very short-sighted, that it's something we'll be doing for, maybe the next year or 2, but then we kind of won't be doing it? Or from what y'all are seeing, do you think this is kind of a permanent change that we're just going to see in society going forward?
Yeah, it's a great question. We months ago, sort of in the thick of the lockdown, we put together this deck that I think Zak Schwarzman presented 200 times in 20 days. He was pretty burnt out, but it had 4 quadrants, and one was like, this thing is accelerating. One of the quadrants was, this type of tech is accelerating because of COVID, but it's not going to stop. Another quadrant was, this is decelerating because of COVID. And another quadrant, we had, this is accelerating because of COVID, but is likely going to stop. So when we look at technology like thermal scanning, and one of the benefits of what's so cool and we're so grateful about being able to work at MetaProp, and what Aaron was talking about with our innovation service practice with our LPs, is we get to look at thermal scanners because our LPs need thermal scanners in their buildings yesterday. Right? They need to get these in order to reopen and get people to feel safe back to work in certain instances. So we can do a deep dive into that sector, and then we can also decide, get really educated on it. And then we can also decide that, this might be a fad, or this might be a sector that's going to be controlled exclusively by incumbents. And therefore, there's no startup opportunity there. And now not only have we helped our LPs by sourcing a good piece of tech for them for the near term, but we potentially save them a lot of money by not making an investment in something that might go away after, to your point, 2 to 3 years, right? Where there's, or at least there's risk, right? Maybe it stays, maybe it doesn't. But we didn't back any of those companies because we couldn't get a constructive answer internally on that. We couldn't get consensus on that, right? So I think, but the stuff that, COVID is accelerating, and we have conviction that even in a vaccine era, this stuff is the new norm. Like, I'll give you an example, using software to detect if you have deviations in what you're building on a construction site. Like, yeah, that's accelerated immensely because of COVID, but is that really going to get ripped out when people start going back to the job site more? I don't think so. They're going to be wed to the fact that they can now detect deviations from their computer, and it's all tracked and logged. So that's the stuff we're really excited about. And the stuff that is put on ice due to COVID, right? Like the hotel tech stuff, we're still excited about it. And we still have check-ins with those entrepreneurs every quarter. And we try to, be supportive of them and try to earn their trust and a potential seat at the table the next time they're raising. But we're not looking to aggressively pursue, writing a term sheet for a company like that necessarily.
Got it. I'm so jealous of y'all's everyday job. You all get to peek into the future before a lot of people get to experience it. If you just had to make a statement of something that maybe a listener, 5 or 10 years from now, this will be going on in the world, but if you listen to it today, it just sounds crazy. Is there something that comes to mind?
Yeah, I think they're going to be on Mars. And so that'll be pretty weird.
Okay. Elon Musk is driving that ship. Aaron?
Yeah, I think we're going to get there.
Aaron, is that your prediction, or is your prediction Venus or Pluto?
Make predictions. I support the guy who makes the predictions. You got the smartest guy in the space on the phone.
I love it.
I'm going to yield to the expert.
Okay, fair enough. All right, last question on investments. Every VC has an investment that got away, the guy that didn't put money in Uber or Airbnb or something like that. Do y'all have an investment that got away that keeps you up at night?
Yeah, the one. Do you know the Katy Perry song? The one that got away?
I'll listen to it after this.
I have many of those. Bessemer famously has an entire website devoted to it. It's their anti-portfolio. And it's hilarious if you haven't gone through it. The stories, yeah, we have a lot. I could have been, when I was still angel investing, I would say I could have been way more aggressive trying to stuff money into companies like Hightower, companies like BTS, companies like Juniper Square. I was friends with the founders, but I could have called the founders every day until they allowed me to put $50,000 into their business just to get me to stop calling them. And I didn't do that. So I would say for me personally, those are some of my biggest FOMO ones. I would say missing out when I probably could have convinced them to take my money. Missing out on Hightower and DTS early on, I would say would be my number one. But I have many. In my own Ante portfolio. And, one of the things that Aaron and I want to do, building our own organization, is that if we have an Ante portfolio, build up such a great relationship with those entrepreneurs where if we have a really long-term view on PropTech, right? We have a multi-decade view on PropTech, I can back their third business. So we keep our Ante portfolio, I would say, we're in contact with a lot of those people because you just never know in this business. And you never know when we might have a growth equity vehicle that might be able to back a company, or private equity vehicle right down the road. And you never know when they might, sell their company and start a brand new company from scratch and want to get that seeded. Like you just don't know. Our one of the most successful deals we've had to date, this company Attentive, they just raised capital, $2.2 billion valuation. We got in at the seed. That was a serial entrepreneur. I backed him in his first business called Tap Commerce. So if you can stay in the game long enough and meet enough of these serial entrepreneurs and try and do right by them, good things can happen.
Do y'all have morning routines? Something that gets you going during the day?
I don't have a morning routine.
Okay.
My morning is pretty crazy, focused on getting my kids fed and out the door to school. I'm grateful that they're in school some of the time.
Yep.
So I would say that is my morning routine.
Yeah, I work out usually in the mornings, take the dog on the multi-mile walk, listen to podcasts like Chris Powers.
I love it. You're starting your day off right, Aaron. I need to tell more people that. All right, my final question. If y'all had a billboard on a major highway where you live and you could put anything on that billboard for the world to see, is there something that you'd put on it?
I would put vote.
Vote, okay. Zach?
I would put our book, PropTech 101. It's a best-selling book. It deals with the ins and outs of PropTech, of our approach to it, the industry, the constituents, and it's just a fantastic read. So I would want a billboard promoting that wonderful thing.
I love it. And if people want to reach you, how can they get a hold of y'all?
You can email me, and we do respond to cold emails. My email is zaarons@metaprop.vc. And if you're an entrepreneur, let me know what kind of problem you're trying to solve.
All right, guys. Thank you so much for taking an hour out of your day to chat with me. This was awesome. I really appreciate it.
Thank you.
We love you, Chris Powers. Let's do some deals together.
We will. We will. Love you guys. Have a great rest of your Friday.
All right, buddy. Y'all be good.
All right. Thanks, guys. Hey everyone, it's Chris here again. Thank you so much for joining me on this journey. If you enjoyed the show, please subscribe to us on Apple Podcasts, leave a 5-star rating, or write a quick review. Thanks again, and I'll see you on the next episode.
Chris Powers is the founder and CEO of Fort Capital LP. All opinions from Chris and guests of the Fort podcast are solely their own and do not reflect the opinions of Fort Capital LP. This podcast is for informational purposes only and should not be relied upon for real estate or investment decisions. The Fort with Chris Powers is produced by Straight Up Podcasts.